Hey, good morning. Let's go over today's trade plan. So in the overnight session, ES failed at that 86.75 to 88.75 area yet again, and is pulling back towards the 75.5 to 77.5 area, which is pre-market support. Now, on the larger time frames, the buyers can still maintain control, but on the smaller time frames, at this point, we've seen a rejection of that all-time high 3 times, and now heading down into 75.5 to 77.5. That area may not hold. So off the open, we're going to be using 80.5 to 82.5 as the micro bull bear zone, and depending on how the market reacts at that zone, it'll help us establish our short-term directional bias and tell us which side is being more dominant and which side is really in control. So at this point, the way the market is set up, the overnight session, we've seen some short-term liquidation, and if the market continues to hold below 80.5 to 82.5, then we could be setting up for a break of 75.5 to 77.5 for a test of the 72.5 gap, 71.75 naked VPOC. That's a spot where buyers may enter, but at that point, you will be breaking below this sideways range, and because of that, there could be a little bit more follow through before buyers step in and again, turn things back around. So what we have to realize over here is that it would be a break below a multi-day balance, but that balance was established on very light volume. So there could be some level of follow through, but it doesn't mean that there has to be a complete trend down day coming out of this. Buyers can still be active on range extensions below 75.5 to 77.5. So on the downside, that gap area 72.5 is the aggressive spot where buyers can step in the event of a break below 75.5 to 77.5. The more conservative area is actually down towards the naked VPOC at 2063. We have some short-term support at 66.75 to 68.75. Buyers could be active there, but really the more conservative zone is at this point going to be down towards 2063. But given that the overall bias is still bullish, buyers can be active at pretty much every level along the way, at least in some capacity. It doesn't mean that that has to be at a level where the selling completely shuts off, right? So below 75.5 to 77.5, we have some support here around 71.75 to 72.5, and it doesn't mean that the selling completely has to stop here and then just completely reverse, but there could be some reaction at 71.75 to 72.5, and if it's a strong reaction, then it could actually shut off the selling, but that's something that needs to be gauged in real time. The reason that this is the aggressive spot is because it's immediately below the 75.5 to 77.5, immediately below these recent lows, and we just have to, think ahead a bit and realize that a test of 72.5 would only happen if the market were liquidating below these recent lows, right? So at that point, the momentum and the short-term control would be on the sell side, and anyone buying 71.75 or 72.5 would be fading that. So you'd be going against the immediate control, against the immediate momentum, and what you'd really have working for you in that case is the larger time frame bias and trade location. But that's about it. And from there, if we can then go back above 75.5 to 77.5, then it could be a slightly better trade. But this is going to be a more aggressive spot, and for that reason, even 66.75 to 68.75 is still going to be considered a aggressive location, just because on the upside, the target is going to be 75.5 to 77.5. So just keep this main target in mind. Then, if you're breaking below 75.5 to 77.5, then this is going to be the first area of immediate resistance. On the way back up off of any of these levels. So just keep that part in mind. But on the larger time frames, this is still a very bullish market, and even a deeper pullback would not necessarily change that. So even if we came all the way back down, to 63, or we even came back down to 56.5 to 58.5, it would not affect the overall larger time frame bias. But on the smaller time frames, on the day time frame, this 75.5 to 77.5 is going to be important. 80.5, 82.5 is going to be important, and holding below that, we could get continued selling, and that's why we can take longs on range extensions lower, but we just have to keep that short-term context in mind that we would be going against the immediate momentum and immediate control if we are taking any longs down here, and there could be a little bit more follow-through as the market is breaking below this 3 or 4 day balance. But because it happened on light volume, doesn't have to be big follow-through, right? So those are really the main ideas on the day time frame. So off the open, just keep an eye on the micro bull bear zone, pre-market support. Failing over there would just confirm that the sell side is in control short term. Bring some of these lower zones into play, potentially even 63. Now the volume is still running extremely light, so we have to keep that part in mind too. And this is still, for the most part, a holiday market. So just keep that idea in mind as well, that the light volume could mean that just there's not enough range potential to really push too far down. So those were the main ideas. Let's see how we react at pre-market support, micro bull bear zone, and take it from there.